In 2021, while everyday savers left trillions of dollars sitting in bank accounts earning almost nothing, the largest private farmland owner in America quietly kept buying dirt. His name is Bill Gates. And here's the part nobody talks about. The wealthy almost never buy inflation protection after prices spike. They buy it before. Today, I am giving you the 7 assets they reach for first, including one that pays you a government-guaranteed rate most people have never even checked. Number 5 is the one Wall Street hopes you never figure out. Welcome back to Elite Grind Group. I am Marco Valenti. Here is the brutal math. At just 5% inflation, the cash in your savings account loses half its buying power in about 14 years. Inflation is not a headline. It is a silent tax on people who hold cash. So if you want to know how to protect money from inflation, study what wealthy investors actually buy. Let us break down all 7. Asset number 1 is the most boring on this list, which is exactly why it works. Treasury inflation-protected securities and Series 1 savings bonds. TIPS adjust their principal with the Consumer Price Index, so when prices rise, your bond grows with them. Bonds combine a fixed rate with an inflation rate that resets every 6 months. Here is the obscure detail. That fixed rate portion stays with the bond for 30 years. Wealthy families grab bonds when the fixed rate is high and hold them for decades. You can start with as little as $25 at Treasury Direct. Asset number 2 is Farmland, the asset Gates kept stacking. Farmland has beaten inflation in nearly every high inflation decade on record because it wins twice. The land itself appreciates, and the crops it produces are literally the food prices that rise during inflation. For most of history, you needed millions to play. Today, farmland REITs and fractional platforms let regular investors own a slice for the price of a single share. Most people never hear about this option. Asset number 3 is gold, but not for the reason you think. The real story is, who is buying it? Central banks around the world have been purchasing gold at near record levels, and major banks have floated price targets above $5,000 an ounce. When the institutions that print currency are stockpiling the one asset they cannot print, that tells you everything. You do not need bars in a vault. Low-cost gold ETFs do the job. Asset number 4 is income-producing real estate, and here is the hidden mechanic. When you lock in a fixed-rate mortgage and inflation rises, rents climb while your payment stays frozen. You are repaying the bank with dollars that are worth less every single year. Inflation quietly shrinks your debt while inflating your asset. That is why real estate investing explodes in search interest every time prices surge. REITs give you the same exposure without ever fixing a toilet. Asset number 5 is the one Wall Street quietly loves. Pricing power stocks. Warren Buffett has said the single most important factor in evaluating a business is its ability to raise prices without losing customers. Think of the companies you keep paying, no matter what the price tag says. During inflation, these businesses pass rising costs straight to customers, and their profits keep growing while weaker companies get crushed. This is how the wealthy stay invested through inflation instead of hiding from it. Asset number 6 is energy and commodity infrastructure. Pipelines, royalty companies, and producers benefit directly because energy is usually the first price to spike. Many even have inflation adjustments written into their contracts. And asset number 7 is the one nobody can take from you. Equity in your own cash flow. A skill, a side business. Intellectual property that earns royalties. The wealthy understand that the ultimate inflation hedge is the ability to raise your own price. So lock these in. TIPS and bonds for guaranteed protection. Farmland and gold for hard assets. Real estate and pricing power stocks for growth that rides inflation instead of fighting it. Energy infrastructure for the first wave of rising prices. And your own earning power above all of it. The pattern is simple. The wealthy own things that rise with prices. Everyone else holds the cash that those prices destroy. Inflation does not announce itself. By the time it is on the news, the smart money already moved. The question is whether you position yourself before the next spike or after it. Drop a comment and tell me which of these 7 assets you are starting with, because I read every single one. If this opened your eyes, hit subscribe and turn on notifications, because next week I am breaking down the 5 money moves the wealthy make in the first hour of a market crash. You do not want to learn that one late. Quick disclosure, this video is for educational and informational purposes only and is not financial advice. I am not a licensed financial advisor. All investments carry risk, including loss of principal. Always do your own research and consult a qualified financial professional before making investment decisions. As always, stay focused, stay consistent, stay elite.